Good morning, everybody. Welcome to another episode of Wise Tech for Wise Money, a podcast where we explore how technology, innovation, and smart strategy are reshaping the financial services landscape. I'm your host, Gary Wayne, founder of A1 Solutions International. Today's episode is called From Social Sentiment to Smart Alpha, Building Hedge Fund Algorithms with AI. And trust me, that title doesn't oversell what we're diving into today. I'm thrilled today to have Brandon joining us from Toronto. Morning, Brandon. How are you today?
Good morning. I'm doing well. Doing well. Super happy to be here. And yeah, thanks for having me on.
Cool. Good to have you. It's a good subject to be talking about. Brandon has built something really fascinating. A company that's essentially created a sophisticated filter over social media to extract financial intelligence for the quantitative hedge funds. They're using AI and LLMs to analyze millions of opinions in real time, rate them against actual market performance, and deliver actionable data feeds for some of the smartest money in New York. Brandon, welcome to the show again. Before we dive into the technical side, how you're turning social media noise into tradable alpha, I'd love to start with your journey. How does someone end up building algorithms for hedge funds? What's your background? Were you always in fintech, or did you come from trading, technology, or somewhere else entirely?
Absolutely, yeah. So I came from more of an academic background. So I did a finance degree in school, and then I was working as an economist actually at the government. And I realized that, a lot of those numbers that they put out are really just pure estimates, and they're not really based in fact. And so it dawned on me that, these numbers, they're moving the market, and yet they might be less efficient than we're giving them credit for. Especially, in school, you're very clearly taught the, efficient market hypothesis and like everything's priced in, but that's really not the case. And so I did that for a while. And after I just started trading for myself, I really wanted to give it a go and see, okay, is this a way to make money and have a living? And the truth is it is. And it just became this life-changing sort of journey where I started to see the power of financial markets and how you could sort of extract value through arbitrage and by knowing the right information. And so I just became obsessed with the question of why don't more people do this? And, really like, am I getting lucky? Why am I making money? Like, what is the story behind the fact that the average individual is not really making much money in the market? And really it comes down to noise. So the markets are just inherently noisy, especially the information environments. And further, there's competing incentives. So you might be reading an article by a very reputable brand, Goldman Sachs, etc. But you don't necessarily know if the company they're covering is, a client on the IB side, and in which case they're never going to give it a negative rating, right? They're going to keep that client. And you as the individual reading the article, you don't know these information, right? You're not privy to everything. So, kind of just seeing how this works in practice, I wanted to see if there is a way to create essentially an objective system to evaluate information. And I realized that if you're constantly and disciplined enough to compare opinions that are only related to future price, you can theoretically do this because price is a known factor. It's public information. It's never going to change. And so what we do today is essentially we take as many opinions as we can from social media as well as from our data partners. So right now we're partnered with BuzzFeed, The Street, a few other reputable websites. Essentially, we ingest their articles and, like you said, run LLMs over top to isolate those opinions. And then we're just comparing what happens in reality. And over time, you're getting a pretty clear picture of who actually knows what they're talking about, who is a credible source. We package those guys up into our own API and then sell it to quant funds in New York. And yeah, really, it does work. It's really taking advantage of the fact that there's so much volume online. It's just hard to sift through. And so we're just this ultimate filter on top of a ton of information going at a given time.
What's the name of your company? Full name of your company?
Yeah, it's called
So
PlayFair.
listeners,
You can find us at
sorry.
playfairapp.com. But yeah, it's our company.
And
leveling the playing field.
you sell these, you actually sell your service to quant funds.
Yeah,
Anybody else, broker dealers or any other
mainly just
entities?
quants at the moment. Yeah, it's really just quants. We would love to break into the broker dealer market. We're looking at some privates as well. But right now it's really just the hedge funds that can dig into the scale of data that we offer.
Okay, something I might be able to help you with later. How do you actually personally get the revenue coming through to you?
Yeah, so it's a subscription-based model. They're subscribing to a high-quality feed, gives them signals on a daily basis, every 5 minutes, really. And it's a subscription, like most APIs.
Right, okay, so no share of the profits.
No, it's not a profit share, unfortunately. That would be very lucrative for us, maybe one day, but no, it's really just subscription-based.
Okay, tell me a little bit more about how the LMMs work over social media, how they extract financial opinions, how you rank them against market performance. Walk me through what this really looks like in practice, and how you extract the data. Obviously not the technicals, but how it actually looks like in process.
Yeah, so essentially we are grabbing the data from a source and then we're running it through our first layer, which is going to differentiate, is this an opinion that we care about? Yes or no? So that's a first LLM. And then you have another pipeline that basically says, okay, if it is an opinion, let's extract now the sentiment, the speaker, what is the pros of the opinion. So different entities that we care about, and we can adjust these entities very quickly. And sometimes they're client specific as well. Sometimes they want us to identify the trading strategy, the reasoning, like different layers. And then from there, you take as many of those layers as you can, and then you peg them. You basically assign a price to that moment. And you say, okay, so here's what this person thought. This is the price at this point. And then we're basically just evaluating it for some curve into the future. So typically we're looking on a couple weeks to months horizon, but we adjust this on a client basis. And then basically you're doing this over time. So on a per opinion basis, and then you group those up into a weighting per individual. Usually we do it on a per account or per author basis. Sometimes we do it on a sector basis. Sometimes we're doing it, kind of just pegging it to a stock itself. But then from there, you take those track records, and once you get the signal, now you have so much more information on how to play the signal. Do I listen to it? Okay, if I do listen to it, which direction do I go? What's the holding period? So right away, a fund can quickly go in and out of trades in ways that they otherwise wouldn't be able to.
And you see, you're building track records across millions of people simultaneously. That's extraordinary. Is it? How many people are doing this? How many people in your team put this together?
Yeah, it's like four of us, so it's a pretty small batch of us, but we're all pretty committed.
And is it plug and play? Is it difficult to install as a quant fund? Difficult to access?
No, it's very easy. They just need our URL, our API URL, and then we give them a bearer token, and they're ready to go. No installation. It's really just calling the code.
Sounds fantastic. How do you filter signal from noise? And social media is obviously notoriously full of brilliant insights and complete nonsense. So how do you separate the two?
Yeah, so really we just leave it up to the scoring system to separate it. So the first layer, the LLM, does a lot of the heavy lifting. So it's filtering between is this an opinion or is this just some random guys talking nonsense? So the LLM does a lot of work. And then from there, the scoring system is the ultimate filter. So the scoring system is what differentiates the accurate people from the noisy people. And that's kind of where the volume, the math behind it is not super complex. What's complex is doing it at scale and then getting, the differentiation to happen over time.
As a trader, I'd be asking, what sort of return can this show me?
Yeah, I mean, some of the returns are massive for some of our accounts. We have people who are making 400% over 5 years of time.
Unbelievable.
You have really, really incredible results. And I think it's because social media is so untapped in this way, right? Like, unless you're coding and running people through models in this way, the alpha is just not getting used. So it's pretty wild.
Sounds very exciting. And if I was going to be using it, how would I set my stop losses, etc.? Would the
Yeah, you
system tell
probably
me that about that as well?
the system does, yes. You'd probably want to set them to just a negative 5% stop loss. It's the easiest way. That's the way we do it when we're evaluating portfolios. Negative 5% stop loss per signal, and you're good to go.
What made you actually decide to sell it as a subscription as opposed to a revenue share or even create your own hedge fund?
It's a great question. So, we had to start somewhere. We didn't want to put the cart before the horse, so to speak, and just dive into trading our own capital and trying to make a living off that. We wanted to prove that it could work at the professional level and also learn from them, right? Like as you work with these clients, you get to see what do they care about, what are the factors that move the needle for them, and so that's why we opted to let them make the trades on their end, but give us an idea of what inputs are valuable to you. And so maybe over time we can take the strategies that work and potentially form our own portfolios down the line.
That would make sense. You mentioned you have a handful of good clients and you're profitable. That's no small feat, obviously. How long did it take to get to that profitability? And
It
what were
took
the
us about,
biggest challenges?
yeah, oh man, it took us about 4 years. Biggest challenges were definitely, getting the first client was very tough. Breaking into the industry is, sales cycles are long. People are skeptical. Your data is run through the ringer, on their end. They really, really evaluate it heavily. So you just have to, everything's got to be correct. You can't have any mistakes. Sorry. And it really is just a long process. So that was the hardest part. But once you get a few, people trust you more. The evaluation is shorter, and you have more to show. So that's the flip side. Is it becomes easier over time.
How many clients have you managed to build up to?
Yeah, so we're somewhere around a dozen. I mean, a little less than a dozen, but yeah, that's kind of the way we frame it.
US based or
They're all
global?
US based, yeah.
And what products are you covering?
So we're
What
covering,
markets are you trading?
yeah, so we cover all over. We do a lot of crypto. We do a lot of mostly, US equities. We do cover commodities, rates.
Gold?
Yeah, gold, a lot of gold information. Typically, we try to tie everything back to a public ETF. So really, everything ties back to the U.S. market. That's just the most tradable assets. That's what our clients care about. So yeah, it's really the U.S. market is the main one.
Okay, and can I be bold and ask what subscription costs?
Yeah, subscription costs our client anywhere between 50 to upwards of 150 per year. And so it can go for custom cases, it can go beyond that. Typically, the range is somewhere around 50 to 150 grand per client per year.
Okay, let's get into the technical architecture. You're running LLMs at scale. What's your tech stack look like? Are you building proprietary models, or are you using existing AI, or you're doing all your own coding?
Yes, we're using existing AI for the most part. In some cases, we're using a local model. So we'll use Google's Gemma, download it locally onto an Azure terminal, and then run things there when, our clients don't want us to give the data directly to an LLM. For the most part, we're using API calls directly to Google's Gemini or OpenAI's GPT. So those are the main two that we're using in our stack currently. We've tried others. We've tried XAIs. At this point, they're all fairly commoditized. There's not a whole lot of difference between them, to be quite honest. So yeah, that's basically it. Sometimes we have to use a local version. Typically, we're just sending API calls to the broader LLMs.
Are you using real time or near real time?
We're using real-time data. Yeah.
Is there any latency involved there? How does that work?
Yeah, so typically we offer about 5 minutes latency latency. So between the time we get the signal to when it's outputted into the API, it's about 5 minutes.
Okay, in the hedge fund world, everyone's obviously looking for the edge. What makes your data feed differentiated from alternative data providers?
Yeah, so typically people don't work with social data the way we do. They're aggregating all of the posts and basically saying, okay, here is the positive, negative crowd of what the crowd thinks of Tesla, what the crowd thinks of Ethereum, Bitcoin, etc. Which is it's a good way to do it, but typically what you'll find if you do it long enough is that things on social typically skew positive most of the time. And when they skew negative, everything is negative. So even if you're looking at the crowd, you're not getting that nuance, right? You're getting maybe the marginal delta shift in, okay, today the crowd is 80% positive on Tesla. Yesterday they're 75%. You're not getting much information in that, 5% difference. So what's different about us is we actually don't care about the entire crowd. We're looking at specific authors, and it's a much more arduous process to kind of peg things on a one-to-one basis across millions of people. But we find that's the best method.
So when a number like non-farm payroll comes out, obviously it can be, that's what the market, the number that shifts the market the most at the moment, as done for the last few years. How does the system cope with that?
Yeah, so if a number like non-farm payrolls comes out, we're going to look at all the posts around that number. And we'll typically have looked at posts prior to that number, so the week leading up, 2 weeks leading up, and see what do people think it's going to be. And then based on the actual number, we'll give them a weighting on how close they were. So that's a number that we can use as an event horizon. And then we'll, typically look at just general discussion around that. Were people bullish leading up to it, and how has that changed? So there's a lot of factors you can look at, but typically we'll use that as an event horizon itself.
Okay, that's interesting. You might have covered this a little bit, but there's a lot of firms scraping sentiment, analysing retail positioning. What is actually your unique angle that makes it so different?
Yeah, the main unique angle is really pegging things back to the author. I mean, people do retail sentiment all the time, but unless they're going through the entire history per person, you're not getting the full story, and you're really missing the core alpha, which is only coming from a select few people. It's not coming from everybody. That's the truth. It's the power law to life. Most of the money in the world is made by a small amount of people. And the top richest 100 people in the world have as much wealth as the bottom 50%, right? So that rule plays out with information as well, and alpha. And so the majority of alpha is held by just a small group of people. And so that's where we come in. We try and find it. And yeah, that's kind of the way we think about the world.
Just bear with me a minute. Sorry, I just got a little problem on the system.
That's okay.
Sorry, we'll be able to edit it, so don't worry.
Take your time.
Sorry, I just lost a bit on there. You're dealing with millions of data points from social media. How do you handle the data quality issues, manipulation attempts, bot accounts, or coordinated campaigns trying to move sentiment?
Yeah, there's a lot of different ways we handle this. Typically the scoring just handles it on its own, right? So that's
Right.
As long as you keep that consistent, you are already ignoring a lot of the noise. So you already have a weighting of where those accounts are going to fall, and typically those accounts their scores are so low, and you're already ignoring them. So that's why the scoring over time, it becomes very, very durable in a way, because it already pre-filters that, because the scores just become so low for the noisy accounts.
You're dealing obviously with a lot of regulated accounts. How do you deal with regulation? How does regulation affect you?
That's a great question. Yeah, so we typically have to leave out any accounts where it might be an actual financial broker or trader. So if we know the account is somebody in the market, typically we kind of have to leave them out of the data set. Hedge funds don't want to accidentally trade on insider information. It's better if they don't know. So sometimes funds will want us to identify the occupation of somebody, get very granular, and other times they really don't want to know that information. So it's really just about leaving stuff out and keeping it more generalized so that they can't get into a sticky situation.
You don't have to be regulated to do this, do you?
No, fortunately.
When you talk about going to market and selling to a quant fund or a hedge fund or a broker dealer or brokers, whatever we come across, obviously, that might be interested in your product. How do you actually attack that? How do you go about getting the client, getting them on side? What's your sales technique as such?
Yeah, so really you got to meet them in person. You got to go there. You got to have a talk with them, a discussion. It's a very relationship heavy business. So yeah, you got to go meet people where they are. You got to form that relationship, right? You go to conferences, you speak at conferences. All that stuff moves the needle. But yeah, it's really in person is the best way that we found. And then once you have that relationship, everything kind of flows through email, S3, data rooms, etc. But you got to have that in-person relationship first.
Do you do any Zoom calls or anything like that?
For sure, for sure. Zoom does follow the process.
What,
Yeah.
what's the sales cycle look like? How long does it generally take you to get a client on board, obviously with a decision maker, etc.?
Yeah, it's somewhere around 6 to 8 months. So it does take a while. And typically that's because, clients will have a trial period. So you'll give them about 5 years of data, and then they'll take about 4 months on their end to go and analyze it and try certain things. So, you're not in control of a lot of the period, but yeah, it does take a while. But, these are sticky clients, right? Once you're part of their system, you're part of the system. And so
Yeah. It's
you
like a
become,
club. You got to get in the club.
in a way, yeah.
What you said 5 years of data. Is that 5 years as simulated track record, or is that what you're providing? And is that track record vetted, audited?
Yeah, it's completely vetted by us, through calculations, just mathematics, and then they're going to vet it on their side as well. But that's yeah, it's
So
five
they
years of
do
track
back
record.
testing, etc.
Exactly.
You mentioned you're growing steadily year over year. Where's the growth coming from? New client
Yeah,
acquisition
growth.
or existing clients?
It's clients. Yeah, it comes from serving clients. That's where the majority of our growth comes from. Partnerships as well. Signing new media partners, coming up with more attractive data sets to offer in the market. More unique offerings. But it comes down to clients.
If you could sum up an array outside of quant funds of the type of clients that you think long term could use this, what would they be?
Yeah, I really think the next market we'll enter is the privates. I think there's a lot of real estate roll-ups, for example. There's a lot of mergers and acquisitions in the tech space going on, and I think you can use social info as a great input. You can use all the information online as hugely valuable descriptors of the health of these companies, and whether it's maybe not extracting alpha on the trading end, but you're extracting alpha on basically just the material brand value of each company. And I think that that's going to become a larger part of an acquisition deal. Sometimes you are buying for future prospects of a company, right? Maybe not where they are right now. Revenue is one thing, but where can it go? And I think the online perception of a company is a huge input. And so I think for us, we would love to repurpose our data as an input into these private deals, and see if we could figure out a way to, yeah, just move that needle, because I think it's very exciting.
I came across another guy actually. This is interesting actually. I came across another guy that has built an app.
Hmm.
Now this app actually, I'm not sure because we never got that far, but I'm not sure whether he creates strategies. I don't think he does.
Okay.
But this app works on social media, and the whole purpose of the app, and I will look it up and look in more detail,
Hmm.
is for youngsters between like 18 and 25. but it's
Okay.
based using social media to obviously influence investment decisions.
Mm-hmm.
But it's retail driven as opposed to being made for quant funds and and obviously hedge funds. Do you see
Yeah.
that you could extend your tool to cover retail as well?
Would love to. That's definitely on our roadmap. I definitely think, the ethos of the company has always been to level the playing field, and that's we took the long way around, serving quants to learn from them, but really we want to bring this to the individual at some point and help them really just make money in the market. I think it's the best tool to provide broad value to the world. And public markets are, yeah, I think it's just this fantastic innovation that humans have come up with. And so we would love to, but it's one of those catch 22s where we want to accrue enough value so that we're not just adding noise to their process. We want to be very deliberate about how we offer it. So we're taking our time, but over time, I think we can do something.
Because if you do it to the masses, obviously it's going to have to be a volume
Yeah, exactly.
to obviously make it worth your while. Well, what's your marketing strategy? Are you doing content marketing outside of one-to-one meetings, etc.? Are you doing
Typically, we do email outreach. We're looking at content marketing now, and seeing
right?
how do we get our message out broadly. So that's something that's on our radar for sure. But right now, it's mostly just targeted email outreach to a network that we have, and then just keeping them in the process and following up with updates about the company in general. Yeah, new partners that we're working with, and just keeping the excitement high.
You mentioned when we last spoke that you run a small book with Scotiabank. Is that still the case?
Still the case, yeah.
And it's that's obviously the proved track record, etc. But do you think you also mentioned that in the long term it was to create maybe your own hedge fund? How many
Yep.
years off from doing your own hedge fund do you think you are?
I think we're pretty close. We've been running the book with Scotia for about 2 years now. The returns are great, especially this year and last year, upwards of 40%. So we're getting that institutional track record right now. And yeah, that we're growing a lot of confidence in our signals. So I think we're getting very, very close to having something to show the market that works. Um, I mean, is it our priority right now? No. We've just signed some fantastic media partners that we want to get synced up in our API and offer to our hedge fund clients. But I'd say within the next 3-4 years, we could probably spin up a pretty sizable hedge fund.
And how would that work? Would you run a hybrid system so you keep a subscription system going and then you'd have the hybrid over here,
Yeah,
i.e. the hedge fund over
exactly.
here?
Yeah, yeah, because the subscriptions, once that's running, it's running. As long as it's not breaking, that's the business is running. And so we just have to link up our new partners into that process, which is pretty big hurdle, because we're, have to go to market, go through the sales cycle all over again with a bunch of people. But once that's solved over the next couple of years, we can definitely divert focus to a hedge fund.
Because there's no conflict, is there? I mean, if you analyse it, you
No,
know, whatever information you give the market, it's down to interpretation.
exactly,
So at the end
exactly,
of the day, the fact that you're all using the same tools makes no odds.
exactly, absolutely.
I think it's an amazing tool that you're doing. If you were to launch your own fund, how would you use the same data feeds and everything else you're using now?
Yeah, so with our own fund, we would typically use it the way the scoring is set up. So right now it's set up to look at a couple week to month periods, and that's probably the way the fund would trade, over those horizons, and really just follow the signals and follow the best people, find their niche, find which stocks that they have that edge on, and just trade those stocks.
Would you say this is a systemized way of trading?
For
I
sure.
mean, how strict does one have to be? I mean, is there any personal, when you're looking at the system and you're looking at the messages and signals, is there any room that you, as an individual trader, say, actually, I don't agree with that, or you just follow it you religiously.
Yeah, there's definitely interpretation, but if you follow it religiously, that's the way we want it. That's kind of the way we've
And that's the way
structured
you
it.
maximize your return.
Yeah, yeah, is to say just take the signals as they appear. Once you have a threshold, when the accuracy of somebody on a particular equity is 75%, let's say over 5 years, just take the signal, right? And over time, you'll do well. And so that's the way we've set it up.
If you look about the landscape, is there any other people you know of playing in this field? I mean, I mentioned this guy that's looking at retail, but I don't think he's a mathematician like you. I don't think he's got the potential to write the coding on his own.
Right.
So, is there any competitors out there you're seeing?
There's lots of people in the data space doing variances. There's people who are just canvassing all of social. There are people, but do I think they're doing exactly what we're doing? No. I don't think they have formalized partnerships with large media companies. I don't think they're have as large of a viewpoint on online information as we do. I could be wrong. I'm not 100% privy to their internal mechanisms and the way they do things, but I think what we have is quite unique in the marketplace, and our clients definitely agree with that.
How do you see technology affecting this in the next 3 to 5 years?
I think it just augments what we're doing. As LLMs get better, the nuance of what we're able to analyze gets much better. As the cost of inference goes down, the more volume we can intake, the more data we can intake. I think the main thing is as time goes on with our system, it becomes more and more accurate because now the track records become longer and the amount of people we've done is increased, and it's just as time goes on, the scores become more and more durable, and so that's the beauty of it. So in 5 years, the certainty that we have in the data is continues to go up.
History repeats itself even in trading.
Yeah, it does. It definitely does.
I've seen it myself
Yeah,
many times over the years.
especially in
Every
trading.
entrepreneur has war stories. I mean, what's been your biggest challenge building this business?
Oh my God. I'd say early on, just making mistakes, not knowing how to code was a terrible idea. I think if you're going to do a tech company, just learn how to code. Really, it's such a stupid idea to not know how to code and do a tech. I hear all these entrepreneurs, raising money, they're non-technical founders, they're hiring a CTO, and they don't have that deep understanding of their core business, and over time they're just burning cash that they otherwise would have saved. And it's not to say they need to be doing all the coding, but they need to be able to hold people accountable. That's the truth. They need to be able to hold people accountable, and it's just crazy. You got to learn how to code. So that was number one. Should have just learned that right away. Sorry about that. And number two, yeah, just running out of money was tough. You have to, I would say, try to keep every expenses super low until you're making any money. And I
Did
kind of
you
did the
get seed
reverse. I was
capital?
hiring a bunch of people. We did, yeah, had to go and raise some money. So, yeah, that kind of helped and saved us. But I should have probably waited until I had those initial customers before doing any hiring and trying to get any capital because it just made it a lot tougher.
Do you need any more seed capital or are you self-proficient now?
Self-proficient, but we're always looking for strategic investors, any hedge fund managers who believe in our vision. Those are the kind of guys that we love to have on board on our cap table because, it just speaks volumes. They can lend credibility to the system and give us insight as to what works and what really drives value. So that's the way we think about things, yeah.
And it's been a really good conversation. Before we close up, what advice would you give to other B2B fintech companies looking to sell to institutional clients that you've learned from your experience?
Wow, I would say don't get too wrapped up in the conference circuit. I think there's a lot of conference providers that kind of feed off the B2B tendency where it's tough to get in front of people, and conferences are definitely a great place to do it. But sometimes they're asking for an arm and a leg to form introductions and give you those insights. So I would say find those warm intros through your own network, and then grab coffee with them. Go to New York, schedule a coffee chat, get that FaceTime for sure. But you don't need to be at a $10,000, $15,000 conference to do it all the time. Sometimes you just have to reach out via LinkedIn and get that coffee chat settled, and then keep your expenses low because the sales cycles are long. These are enterprise deals. You're dealing with big companies with compliance, and yeah, it's not easy. So just be prepared for a longer wait than you might think initially. But it's worth it over time because they're very sticky clients.
Fantastic. What's the best way for people to get hold of you if they want to obviously invest or use your services?
Yeah, you can go to playfairapp.com, book a call with me. Love to chat with anybody interested in the space. It's super exciting. I'm very passionate about it. And that's the best way to find me. You can find me on LinkedIn as well, just Brandon Marsh. But go to our website, book a call, and I'll be there.
Don't go away. I'm just going to close up. For listeners, we all have Brandon's contact details now. I'd like to thank you, Brandon, for being on board today. It's been a really great conversation. I think there's business to be done there. I know people already that could use your service, I'm sure. To our audience, I hope you enjoyed and found Brandon's podcast interesting. For people who want to get hold of A1 Solutions, you can get me on LinkedIn or Gary Wayne at a1solutionsinternational.com. Once again, everybody, I want to thank you for listening. Brandon, it's been really, really good. I can't wait to talk to you further on this.
Thank you, Gary.
Thanks for
Such
attending.
a pleasure. I really appreciate this. Thank you.